Hello traders! Today we're gonna have a look at our liquidity levels and zone indicator, which is very good. It's absolutely amazing.
So this is the 1 hour chart on the Bitcoin, right?
Bitcoin, right?
It's really cool. So
We have some zones here, right? You can see we have this nice green zone. It's saying a pool, and what we're meaning about the pool is a liquidity pool. That's where we have a pool of resting orders that's gonna support the market. It's either like big institutions having resting orders that they want to get filled at these levels, and it's and also in these areas, often a lot of stop losses are triggered, and retail traders panicking around these levels and take stop losses and such like that. So it becomes a pool of liquidity where institutions and banks and big traders can get filled at the at the stable price point. All right, so basically every institutions and market makers and whatever, the ones who rule the markets, they need liquidity to do large amount of transactions, right? And so they target areas where they can get filled at a stable price point where they don't push the price too much. And that's why they often target these kind of liquidity pools in the markets, since we have huge volumes and they can get filled without moving the price. That's the whole reason of finding liquidity pools. So we built this indicator for that purpose, to find specific areas where we have this kind of liquidity available for institution to trade on. So basically, it's super simple in like how to use it. If you look at this pool right there, it will be plotted in real time. So you will see it on the chart as the price unfolds. So you will easily be able to
spot it when it's
spot
live.
it, yeah, and be able to plan your trades ahead. So in this case right here, the Bitcoin is skyrocketing, right? We get a nice pump right up, and then we start fading, and you start wondering, where should I take the next long? And as a beginner, it can be hard to know. You can use different indicators and all this kind of stuff. You can look for internal swing points or whatever, you know. But with this indicator, you get clear zones where we have these liquidity zones. And that is the area where you will start looking for longs. So after this pump, the price fades nicely. And we know that as we can see the zone in real time, we know that in this area we will have a high likelihood of that the price will hold, or that we get the bounce of this zone. So let's zoom in a little bit. Yeah, so we basically wait until the price mitigates this zone.
So it goes into the zone?
Yeah, into the zone is the most the best one, because then we actually tap into the liquidity, we get filled.
So then it taps into the zone, we wait for it to close. Then we start to analyze, right, okay, this zone's been hit.
Yeah.
We need to know what the next move is. So then we're going to draw some trend lines, some shorts, some longs.
Basically what we can do is, like, if we hit it, the liquidity tapped, and then we break above this zone again, we get this nice candle right there, you see? And we get the push, and we get a little bit of retest back down to fill this area, right? So that could be our long entry, basically. So either when we close above with this big nice candle right there, we're taking out this short-term, very short-term range. It's a little bit of range,
like consolidation
in this liquidity area. Liquidity is institutions are getting filled, large traders are getting filled, they get their positions, and then we get this nice candle that breaks this zone, and we can take the trade on that break, or we can wait for a this kind of
movement, the kind of movements.
Yeah, and this kind of retest. So let's say we take on the retest. I'm usually taking on the break exactly when the breaks. I'm quite aggressive, so I would like enter right there. And in this case, we have the stop loss below the zone, of course. And we can target, most often we can target some sort of significant swing point. In this case, we have a little bit of a swing structure, an internal structure. We get some, this is a fractal forming right there. So we can target this fractal as the first target. So this would have been like a nice 1 to 3.5 in risk reward.
Perfect.
In this simple trade. But these zones are more for traders that have the patience to wait, because it takes time before the price comes down, right? It takes a few hours in this case. The price actually comes and hit this zone. So it's good for traders that want more like they don't want to sit in front of the chart all the time, and they want clear zones they can trade off.
For people like working and things like that. Like that was taken at 6 a.m. on the 9th, which is like when people getting up for work, just check your phone, see what the trades the market's doing. You have all the liquidity zones done for you because of the indicator. You should prep the night before, have a look on the next morning. Okay, it's gone through the zone. Trade, stop loss, TP, leave it. So then by the end of the day, it looks like you're even halfway to the TP. So by the time you finish work, like it's done.
Yeah, you can also set an alarm on the levels and prepare limit orders if you want as well.
Notifications coming in and things like that from TradingView, which is really cool.
Yeah, exactly. So this indicator is for everyone that wants more significant liquidity zones in the market and are willing to wait for it. So that's basically what this indicator does. It plots these zones in real time. As you can see, we don't get so many, so you get fewer trades, but you get more higher quality trades, and that's what most people want, right?
Yeah.
So this is a high quality trade, and then price just straight back up.
And it's patience here, so you're looking for the patient ones.
Yeah.
The ones that are, like you said, the higher quality ones. If you're not comfortable taking multiple losses, like scalpers, you're going to be wanting to take something like this, which will be able to like give you clarity and be like, okay, I'm in a winning position now. Let's just like hold
and this is the 1 hour chart, so you will make a lot of money because this is a great movement, right?
Massive movement, lots and lots of pips. It's gone from what 66,000 to 71,000, like
500. Yeah,
it's crazy.
Yes, it's a good trade for sure. It's good for people who want to hold maybe for 1 or 2, 3 days trades. Really this cool. Kind. So it's very simple, and yeah, that's it. Basically. And one more thing we can talk about is the liquidity in the market. Because if you are a big institution, you don't want to move the market. That's the worst things ever. You don't want to move. You don't want to be the guy or the institution that push the price, right? Because then you get really bad entry and your edge in the market decay. So that's where liquidity plays a crucial role in the market. Because if we have high liquidity in areas, that means institutions can actually transact a lot of transactions and volume within the single small price range. So they get the exact price they want. That's why this level works so well, because they know that they can get a stable price point with huge volume. Otherwise, if they just enter like in these big candles right here, there's no liquidity. So they will like be moving the price easily if they're entering with a huge amount of money here. They will just like push the price and they get even worse, very bad entry, you know. And the edge they're having is fading with this kind of huge slippage if we don't have enough liquidity at different price levels. That's why the liquidity concepts in the market works, because that's the only way they can transact higher volumes.
Perfect. Sounds good.
Yeah. All right, that's it.